What if the world's wealthiest individuals quietly stopped paying their taxes and got away with it for decades? The answer is buried inside $7.6 trillion of offshore secrets, and every ordinary taxpayer on Earth is unknowingly paying the price. In 2015, economist Gabriel Zucman published a landmark study estimating that approximately $7.6 trillion in private wealth, representing about 8% of the entire world's financial assets, was being held in offshore accounts. This was not money circulating in the economy, creating jobs, or funding public services. It had been deliberately extracted from the global system and placed beyond the reach of any government on Earth. Tax havens operate through a deceptively elegant architecture, near-zero tax rates, powerful financial secrecy laws, and dense networks of shell companies engineered to make true ownership nearly impossible to trace. Countries like the Cayman Islands, Luxembourg, and the British Virgin Islands actively compete to attract hidden capital. By 2015, approximately 40% of multinational corporations' foreign profits were being booked in low-tax jurisdictions, according to a 2018 study by economists Torslov, Weir, and Zucman. In April 2016, the global offshore system cracked open when 11.5 million internal documents were leaked from Mossack Fonseca, a Panamanian law firm that had been quietly constructing offshore structures for clients across the world for decades. The Panama Papers exposed 214,000 hidden offshore entities linked to politicians, business leaders, and celebrities from over 200 countries. Among those directly implicated were 12 sitting heads of state and government, a revelation that sent shockwaves through capitals around the world. At the center of the offshore world sits the Cayman Islands, a small British territory in the Caribbean Sea. As of 2019, this island of approximately 65,000 residents had registered more than 100,000 companies within its borders, nearly 2 registered entities for every person living there. With zero corporate income tax, zero capital gains tax, and strict financial privacy protections enshrined in law, the Caymans had grown into one of the largest banking centers on the planet by the late 2010s. When trillions in wealth escape the tax system, governments do not simply accept the shortfall, they redistribute the burden downward. The OECD estimated in 2015 that corporate tax avoidance alone costs governments between $100 billion and $240 billion in lost revenue every single year. That gap is filled by increasing taxes on ordinary wage earners, cutting hospitals and schools, and borrowing, meaning middle-class families around the world are effectively subsidizing the offshore strategies of the ultra-wealthy. By 2017, the international community launched its most ambitious counteroffensive yet. The OECD's Common Reporting Standard came into full effect, requiring over 100 countries to automatically exchange financial account information and eliminating much of the secrecy that had long protected offshore arrangements. Then in October 2021, 136 countries reached a historic agreement to implement a 15% global minimum corporate tax rate, designed to end decades of nations competing to offer ever lower rates to attract multinational profits. Yet even as global reforms rolled out, the offshore system kept adapting faster than regulators could respond. The Pandora Papers, leaked in October 2021, exposed 11.9 million records proving that world leaders, royals, and billionaires were still actively moving wealth offshore even in the middle of the reform era. As of 2024, implementation of the global minimum tax remains uneven across participating nations, and the architects of offshore structures continue engineering new pathways faster than governments can close the old ones.